Good morning, and we now continue with the outlook for sheep. My name is Anne Kinsella, and I would firstly like to acknowledge my co-author, Kevin Hanrahan. In this presentation, the mid-season lowland lamb enterprise is used to analyse the financial performance of Irish sheep farms, as it is the predominant lowland sheep system in Ireland, and only farms with greater than 20 breeding ewes are included. However, for financial data on the hill sheep system, please refer to Table B in the appendix of the sheet paper. But for this presentation today, we begin with a summary review of the financial performance of these mid-season lowland farms for the current year. For 2021, gross margins per hectare are estimated to have increased by 26% to just under €750 per hectare on average, while net margins increased by 123%, more than doubling year on year. In absolute terms, the net margin increased from €104 to €232 in 2021. And from the graph on the right-hand side, we can see that higher marketed output values in 2021, which were up 24% on average, resulted in these higher margins, with Irish lamb prices significantly ahead of 2020 prices, reflecting higher prices in the EU for heavy lamb, prices which were sustained throughout the 2021 year. Input expenditure was much higher, particularly feed input costs, which were up 40% year on year. And this was as a result of increases in both the volume of purchased feed used, coupled with price increases in concentrate feed. Gross output was also boosted by receipt of payments from the sheep welfare scheme, in addition to the higher marketed output value, so that this is estimated to have resulted in higher margins on the average lowland sheep enterprise, which was up 26% on average. And we will now review the input spend more closely. Total direct costs for this enterprise were up over 1/5 on average for 2021. Cost increases are very much driven by those cost components which are highlighted on the flow graph. In 2021, feed concentrate costs increased by over 40%, and this was mainly driven by both the increased volume, which increased 21% year on year, while the concentrate feed price also increased by about 16%. Farmers increased their concentrate feed volume so as to fatten lambs earlier and reap the benefits of the sustained high lamb prices in the run-up to the Easter period and beyond, and also owing to the relatively cold weather in April-May, which reduced grass growth. We can see the effects of this feed cost increase on the graph on the right-hand side, with the arrow pointing to the concentrate feed component. Pasture and forage costs, which comprise of fertilizer and contractor costs, typically account for about 30% of total direct costs for this sheep system. And in 2021, these costs also increased by 10% compared to the previous year. Fertilizer prices are estimated to have increased by 10%, while volume used is estimated to have remained relatively static on sheep farms. The other cost component, which increased substantially in 2021, is electricity and fuel, with electricity prices estimated to have increased by 10% on average, while green diesel and other fuel types increased by various magnitudes. And these are reflected in the overall increase of 19% for electricity and fuel on sheep farms in 2021. If we look at the bar chart on the right-hand side of the graph, average sheep production costs for the 2021 year in comparison with earlier years are shown, highlighting that the 2021 year total production costs are higher than in previous years of normal cost levels, with an increase of about 13% in total costs estimated for the 2021 year. And if we now turn our focus from Ireland to global sheep meat markets. Global trade in sheep meat has grown by 30% since 1990, as illustrated on the graph, showing global lamb exports between the years 1990 and 2020 as sourced from the OECD. Throughout this period, international trade has been dominated by New Zealand and Australia, which are the first and second largest sheep meat exporters globally. In 2020 alone, Australia and New Zealand accounted for more than 3/4 of the value of global sheep meat exports. Herd rebuilding in New Zealand, the world's dominant sheep meat exporter, and the continuation of tight supplies in Australia are expected to keep production at the same level as during the 2018 to 2020 period. The limited sheep meat exports from Australia and New Zealand are seen as one of the main factors supporting international sheep meat prices. And China continues to drive the global sheep meat story further, changing the dynamics of the global sheep meat market. And China is now the largest producer, consumer, and importer of sheep meat. Increased exports of sheep meat from New Zealand and Australia to China means that China is absorbing supplies that would otherwise be destined for the EU market, and thus less of it is competing with Irish lamb in prime markets, which of course is good for Irish sheep farmers. However, improvements in lamb prices in the EU may attract New Zealand lamb into the EU market, but this will very much depend on the price relative to China, indeed if the price differential will be enough to cover the escalating costs of freight transport. So if we now switch our focus back to Ireland, focusing on export markets in 2021. As we know, the bulk of Irish sheep meat production is destined for foreign markets. And in 2021, over 75% of Irish sheep meat production was exported. This reliance on the export market means that understanding likely lamb price developments on Ireland's export markets is critical in assessing the prices that Irish sheep farmers are likely to receive for their output. As illustrated in the pie chart, continental EU markets account for the majority of Irish lamb exports, with almost 1/3 of all exports destined for the French market, as shown as the blue segment in the pie chart. Although France still remains the most important sheep meat export destination in 2021, it now comprises a somewhat lower share of volume exports than it did in earlier years. And exports to the UK, which is shown at the orange in the pie chart, accounted for an estimated 20% of Irish lamb exports, so that the UK continued to constitute a most important export destination for Irish lamb, albeit slightly lower than in earlier years. It was 22% in the previous year. And now looking at the 2021 lamb price story in the EU and Ireland, an exceptional year for prices. If we first look at the graph on the left-hand side, which is showing the evolution of heavy lamb prices in the EU, we concentrate firstly on the current year, which is shown as the blue line for 2021. The EU market was characterised by substantially higher prices that persisted right throughout the year and remained well ahead of the 2020 price levels. The EU sheep meat market faces strong global and domestic supply shortages, with EU production projected to grow by a modest 1.3%. And this means that current prices are supported and will continue to be supported by a steady EU demand. Supply shortages, on the other hand, is the principal driver of the higher EU prices that are estimated for the year. Average prices were also well ahead of the average prices for the 5-year period 2016 to 2020, which is shown as the grey line in the graph. And average prices this year continue to show an upward trajectory. In recent weeks, EU prices have continued to remain strong, and comparisons with November prices show that current prices are much higher than they were for the same period in 2020, which was also a high price year. And for the year as a whole, will be over 20% higher than the previous year. And now if we look at Irish lamb prices, the graph on the right-hand side, which is on the same axis as the EU graph so that they are comparable. The Irish price story is driven by the EU price story. Prices began very strongly, and for the first quarter were about 40% ahead of the same period in 2020. By the second quarter, prices continued the strong upward trajectory and still remained about 35% ahead of 2020 price levels. The circle on the graph is reflecting the period around Easter, which was early April in 2021. This higher Irish price reflects prices in the EU for heavy lamb, which are forecast to persist over the remainder of the year. And the seasonal reductions in lamb prices that normally will be underway at this stage of the year, but the 2021 year is unusual in this aspect, as was the 2020 year. It is expected that the Irish prices for the year as a whole will be well ahead of 2020 prices, and our estimate is that Irish lamb prices will be 30% higher than in 2020. And now looking at the 2021 sheep slaughter story in Ireland. For comparison, monthly sheep slaughter data for 2019 and 2020 are also shown. Irish sheep throughput for the year to date is 5% lower than in 2020, which is shown at the green line on the graph, with over 2.46 million heads of sheep slaughtered versus over 2.58 million in 2020 for the same period. The number of ewes slaughtered for the year to date is 6% lower, and the cumulative percentage of lamb and hogget slaughtered is down 12%, while spring lamb slaughtered is slightly lower at 0.3% lower than in 2020 at 1.44 million, which takes us to the outlook for the sheep sector in 2022. And if we firstly move on to look at the 2022 cost forecasts. Total costs for the mid-season enterprise are forecast to increase 14% on average in 2022. And firstly, if we take a closer look at some of the direct cost components that's driving this cost increase, for 2022, the outlook for input expenditure from the perspective of sheep farmers is not quite as positive as 2021 and earlier years, with prices of key inputs forecast to increase quite substantially. We will firstly focus on feed concentrate. As mentioned earlier, purchased feed typically account for 40% of total direct input expenditure for this enterprise, so that this is one of the most important costs. Feed concentrate prices are forecast to increase by 6%, while the volume of feed used on sheep farms is forecast to remain comparable with 2021 levels, where it already was estimated to have increased by 1/5 within the 2021 year. Overall, expenditure on concentrates is forecast to increase by 6%. The price of fertilizer is forecast to increase by up to 120%, while expenditure on contract chargers are expected to increase by about 10%. So that overall, pasture and forage costs are forecast to increase by up to 71% in 2021. These costs comprise 30% of total costs for the sheep enterprise, so that this will impact hugely on sheep farms. From the graph on the right-hand side, we can see that based on these expenditure forecasts for 2022, total production costs will be well above earlier years, that is compared to previous years of normal use levels, and this will impact greatly on the sector. While the forecasts is that output per hectare in 2022 will increase marginally by about 2% relative to the levels estimated for the previous year. Our assessment is that given the less positive outlook for lamb prices in 2022, it will not be sufficient to maintain margins which will be eroded by higher input costs, so that the average gross margin earned is forecast to decline by 15% to €634 per hectare, while the net margin per hectare are expected to decline by 62% to just over €88 per hectare. Margins earned for this system will continue to be boosted by the receipt of the coupled sheep welfare scheme payment, which is very important. And the graph on the right-hand side shows that the slightly upward trend in gross output for the 2022 year ahead, with the decline in gross margin bringing it into line with 2019 and 2020 years. However, it is also important to say that as continental markets account for the majority of Irish lamb, and although economic disruptions from the pandemic continue to impact consumer demand, solid fundamentals will continue to support demand for Irish sheep and lamb meat exports into the 2022 year. But this average forecast can conceal the wide range in profitability of farms within the mid-season lamb enterprise. And in part, this range in profitability is reflective of differing agronomic conditions, such as soil quality, which can limit the capacity of some farms to increase their intensity of production. So if we classify farms on the basis of gross margin per hectare, that is the most profitable 1/3 of farms, the top, the middle 1/3, and the least profitable, the bottom group, then how do the various groupings perform if we apply our estimates for 2021 and our forecasts for 2022? Due to the higher stocking and weaning rates and other factors, the gross margin per hectare on the top farms is almost 6 times higher compared to the counterparts in the bottom group. So while the gross margin for mid-season lamb enterprise is forecast to be €634 per hectare on average, a 15% decline on 2021. This differs across the groups. Likewise, for net margin, which are forecast to decline by 62% to only €88 per hectare on average. But this average figure conceals great variability. While the key story is the cross-sectional differences in profitability for the 2021 and 2022 years, another story also emerges when we look especially at the bottom and middle net margin groups, where negative net margins still persist even in years of higher margins, with only the top group having a positive net margin. So that 2022 will certainly be a year where sheep farmers will need to focus on their input usage levels, where the escalating price of inputs is beyond their control. The rising cost implications could be severe in the short term and place significant pressure, particularly on lower margin farms, with any output gains fully eroded by rising farm direct and overhead costs. And so, to summarise the 2022 year, which is forecast to be a challenging year for sheep farmers than what the 2021 year was. With the stable EU sheep meat production and market situation and still relatively positive lamb prices, albeit a small decrease in lamb prices of about 5%. While feed use will remain stable, prices are expected to increase by 6% in 2022. Other direct costs will increase by about 2% on the 2021 levels. With the forecast 70% increase in pasture and forage costs, coupled with the 6% increase in overhead costs, means that total costs will increase by 14% overall. The forecast is that gross margins earned by the average mid-season lamb enterprise in 2022 will decline 15% on average to €634 per hectare, while net margins will decline to €88 per hectare, a 62% decline. So that the 2022 year is forecast on average to be a challenging year for sheep farmers. Thank you for your attention.